And while the president calls today's trade agreement with the UK a breakthrough, our next guest says it was the lowest hanging fruit, and what really matters is still China. Josh Lipsky is senior director of the Geoeconomic Center at the Atlantic Council, and he's the producer of the Trump tariff tracker. And CNBC senior economics reporter Steve Liesman is here as well. Welcome to both of you. All right, Steve, where should we start?
Well, I'm interested in Josh's view, honestly, of these tariffs. I just wonder. We seem to have expanded trade potential with Great Britain. I think that's good. I think we might have solved a problem we didn't have.
And I'm curious, and Josh, maybe you can give us the numbers, but it looks like we go from a situation where UK tariffs on us were slightly higher than ours. I don't know if it was 3.5. I don't know what the right number was. And now ours are significantly higher than theirs. So is this a big win for the U.S., even though, to Steve's point, there wasn't a trade deficit?
No, it's a very small win, and it's limited in scope. And if we're 40 days out from Liberation Day and the first win is a U.S.-UK trade deal where we run a trade surplus with the U.K., it's actually not great news because we had been expecting over the past few weeks, and there were rumors about India and Vietnam and Japan. And when we heard about a major trade deal yesterday, that's what some of us were looking toward. So I think you have to think of this idiosyncratically because of the U.S.-UK trade relationship, the economic security relationship, what the president highlighted. It really is limited to these two countries. There's been trade negotiations going back a decade, as the president said today. It's hard to extrapolate what we saw today to other countries. And the big news for me is that the baseline 10%, as USTR Greer said, is staying. And so I take this as a sign that higher tariff rates stay on for longer. You're right, Kelly. We look at the tariff rate here. We have the effective rate of 10%. The UK, very low before, basically drops a little bit, but not much. Maybe reduces some non-tariff barriers, but it's unclear on the details. So a lot to be worked out, but limited in scope from my perspective.
What does the UK stand to benefit? There must be then, is it the headline win? Is it hearing the president praise Keir Starmer, who's a liberal by name? Is it access to U.S. markets? Is it Rolls-Royce? I mean, what are they getting out of this now? Because the president is saying this deal has been he said this isn't the easy one that everyone's making it out to be, that this has actually been in the works for a very long time and no one could get it across the finish line. So he's trying to paint it as if it was actually quite difficult to get it done. And now here it is.
The real win is being first out of the gate, and the UK wanted that. You saw when Prime Minister Starmer went to the White House and offered the state visit to the president. That's what this is about, deepening the relationship on all fronts, not just the economic one. But there are concrete gains for the UK, specifically on steel and autos. So you think about the steel industry in the UK that was collapsing. This can resuscitate it. And you think about cars, limited, certainly, Bentley, Rolls-Royce, Jaguars, but that will help those companies. But again, you can't transplant that to a Toyota, for example. And that's why this really has to be seen just in the small sphere of the U.S.-UK relationship, but it's a win for them. There's no doubt about that.
I'm personally relieved on the Rolls-Royce tariff going away, Kelly. That might have a direct effect on me.
It's going to make a big difference, I know. Yeah.
It'd make a huge difference. Here's the thing, and by the way, how lucky we are to have Eamon in the White House who asks just the questions that we would all ask.
It was fabulous.
Right?
He got a couple of them in and got great answers from the president.
And I just want to underscore what Josh is saying. 10% appears to be a baseline, but a very low baseline in the sense that, remember, the UK was not one of the countries that had the reciprocal tariffs on it. So when I said we were solving a problem we didn't have, that was not one of the countries with the elevated tariff levels that was essentially a problem. And I guess the question, sort of jumping off on what Josh was saying, is what does that mean for the rest of these deals?
Right.
And you're the one who pointed out that this means our tariffs are now higher than they were before and higher than in Great Britain's. It's interesting that it looks like the prime minister over there is going to eat that politically. In other words, he's going to allow these imbalance in tariffs, which I don't know if that ends up being a political liability for him, but I doubt other countries will. So if you're worried about the U.S. ending up with higher tariffs at the end of this process, very high and debilitating economic tariffs, I don't know that you're more relieved today, even while the stock market seems to be very happy. If you want to make the other point, I'd love to hear it.